Hello, and thank you for joining us for another episode of Trade the Chain. It is January 21st here, and we are all about Bitcoin today's episode. Big market movements to the downside. We're going to walk you guys through that. Well, I'm not. Actually, our crypto analysts CJ and Monty from marketrebellion.com are. But we're going to try to explain what's happening and what's going on, what we can expect from here. Ryan is off today, so CJ is picking up double duty, and I hand it over to him to take over.
Just as a disclaimer, I want to let you guys know nothing in this video is financial advice. We are here for educational and entertainment purposes only, and none of this should be construed as financial advice. Next, I want to talk about TradeTheChain.com. This is a sentiment dashboard for social media and analyzing various cryptocurrencies. This is one of just 5 companies in the crypto space that scrape social media data to a direct API into Twitter. I can say personally, I've been using sentiment analysis a lot more in my own trading lately, and it's really helped. But if you'd like to check out this dashboard, as well as the community of traders all throughout the world that Trade the Chain is a part of, they also have their Slack channel in there where the director of business development, Weston, he's made some really profitable trades in the past. So definitely check those ideas out because it is very interesting. Alex, anything else you'd like to add to Trade the Chain?
No, I think that's a good one. I mean, well, I will say, guys, obviously what we're talking about in these episodes is legit because we really do stink at even hawking our own products here. But no, CJ, please go over to Market Rebellion and tell them what that's all about.
Yeah, so Market Rebellion is another sister community of Trade the Chain. And what you get in this service is a desktop charting platform with a market watch panel and a live chat to talk to myself, Monty, and our other international members all throughout the community. You'll get trade insights or trade ideas from Monty and myself on a weekly basis, as well as weekly webinars and a crypto trading education curriculum. So a ton of stuff there to check out. If you want to learn more about it, go to marketrebellion.com/crypto, and you can try it for the first month for just $1. So please check that out at marketrebellion.com/crypto. And if you haven't already subscribed, please do so and hit the like button down below for the YouTube algorithm. We really appreciate that. But now getting into the big boards with Bitcoin. We do have a breakdown that we've been talking about here for the last week of this descending triangle formation on the one-day chart. Now we are finding some tentative support here with a bounce, and this is most notable on the 1-hour chart. If we go to the 1-hour chart, we can see that we hit an actual red 9, so a red TD by 9 on the 1-hour chart, and so we're getting a little tentative relief from that. But overall, I see this as a relief rally in the midst of a larger downtrend to these golden accumulation channels down below.
Yeah, I totally agree with you, CJ. And one kind of important question that was posed in our chat by a person who's a member of both communities is, like, we were talking about how this kind of seemed like it was going to be an extended period of bearish price action, but today was such a steep decline. Do you think this may have like accelerated the process in price flipping back to bullish price action?
Yeah, so what I would say is that, anything can happen, right? We certainly could go back up, test levels like 40K, break a higher high, and then go to 45 or 60. Like, I'm not ruling that out as being completely impossible. I think it's extremely highly unlikely based on this bearish posture that we have any bullish momentum in the interim. And the reason why I have more conviction in the fact that this will be a 2 to 3 week downward consolidation as opposed to a kind of shorter interim pullback and then an immediate rebound is that, if we look at the weekly chart, if we were to just go back up to new highs, this wouldn't seem as if it were anything. It would kind of look like this 9 where we corrected for just a short amount of time, but then immediately continued the trend. What I want to look for, or what would be characteristic in previous historical Bitcoin bull markets is a pullback, a sideways consolidation for about 2 to 3 weeks, and then a final test of this bottom Bollinger Band. It's a very simple approach, but trading in many instances doesn't have to be complex. It's more about being disciplined and staying the course of your plan. And as you can see, we could get some more neutral to bearish price action here. I think that's what would be very probable and characteristic of Bitcoin based on historical trends. And then inevitably come down to some of these lower levels and possibly buy off the bottom Bollinger Band. I think if we can consolidate, go down and create a macro higher low, that's going to be beautiful for the trend. Because if I zoom out here, and what I show you guys is an August timeline and a projection of 120,000 by August or the end of the summer. And that was a projection not by myself, but from, I believe it was Morgan Creek Digital, Pomp's company or his firm, and their investor newsletter put out a prediction stating that. So we'll see how the trend, comes in and plays out. But I'm looking for that macro high or low here in the next 3 to 4 weeks.
Or 400,000 if you're Guggenheim. Depends on who you listen to. I like that newsletter better. I mean, 400,000.
Well, I mean, this is by August, right? So
that is true. That is true. What's interesting here is that it's the rest of the market is following the same direction. So there's not that trickle down money effect, that we always talk about with, money going into alts when the downturn of BTC or ETH. But I will say there's an interesting thing out from CoinShares, and CoinShares is saying that some institutional investors are taking profit during this retracement. Possibly, maybe it adds to the retracement. I doubt it. I don't think there's enough outflows to move the needle right now on the institutional side, but they're saying roughly 85 million outflows from institutional crypto products this past week. They're also noting that the rising trade-weighted US dollar, the USD index, is typically inversely correlated to Bitcoin prices. So that phenomenon is happening as well. But do we think that institutional outflows could move the markets more if that number rises? I also want to say that inflows are remaining strong as well. 359 million into crypto investment products this week from the institutional side. So there's still that outweigh of inflows to outflows.
Yeah, this is like a really important kind of metric to look at, is kind of the rate at which institutions are buying Bitcoin. We've seen how important it's been this past year. And for me, although it's kind of noteworthy that they were taking profit at around 40K, I think it's even more noteworthy to take a look that the inflows are finally going back up and people are finally buying Bitcoin at the same rate as they were before Christmas. So between like Christmas and now, we've had a little bit of, I think, institutions kind of taking money off the table, or at the very least, slowing down the amount of money they're putting into Bitcoin. But I think that's starting to really change. And that's really going to be the $1 million question in determining when Bitcoin does flip back to bullish price action. When we had that first dip just a few weeks ago, or a week ago on Monday, the first initial dip, institutions were more than happy to buy up Bitcoin at 30K. So we had that massive red wick. And that was actually when the number of whale entities hit an all-time high. So I think institutions are still showing that they're content with buying Bitcoin around 30K. And I think the outflows are just a result of profit taking around 40K. And Ryan made a good point a few weeks ago. The institutions are institutions because they trade smarter than retail investors. So I think they kind of saw that the market was largely overbought. Retail people were FOMOing in, and they went ahead and took some money off the table. So I don't think this is going to really contribute too much to any more bearish price action. But until they start really buying up more Bitcoin, we're just going to remain in this kind of neutral to bearish territory.
And Monty, I want to just speak to one thing about profit taking and large institutional entities selling into retail investors, because this is kind of why we use the sequential indicator, or why the sequential indicator was created, to be able to sell into strength. Because if you're a whale or an institution trying to take profit, you can't really do it right now, because you're going to just crash the market, and it's going to overwhelm the market and the participants with bearish price action. The way that large corporate institutions can sell into strength is when the order book has sufficient float in it. When the order book is packed with buy orders, when everybody wants to buy Bitcoin at 40K, that's when the institutions can take a good amount of profit off the table, because they actually have that order book float to be able to sell into without crashing the market. So that's what I believe the first pullback was that we saw here. And speaking to the DXY, the dollar currency index, this hasn't been something that I've talked about recently, but I have watched this in the past. And all throughout 2017, when we had our massive run up with Bitcoin, that was essentially when we had a massive decrease in the strength of the US dollar on the weekly chart. So to your point, Alex, that you mentioned earlier, the dollar currency index has had somewhat of an inverse correlation with Bitcoin and the overall currency market. And what we can see now is that we're bottoming after reaching a TD buy 9 on the weekly chart. Pretty big signal that we're at least probably going to retest this middle band, or potentially even the top band. And so historically, if we look at the 2018, 2019 bear market, when the DXY was increasing, it was very difficult for Bitcoin to increase with it. We had a bear market all throughout the time when the dollar was becoming stronger. So just, not an absolute indicator, but something to definitely consider and take a look at when evaluating Bitcoin, because they have had an inverse correlation to one another historically.
Yeah, and folks, I mean, if you want to follow this chart, it's a DXY chart, and it it presents itself as a good indicator to follow alongside Bitcoin. CJ, the one thing is that I think there's a big psychological level at 30,000. What we just went through, there's some explaining, or at least alluding to, that those floors could go lower. Are we really talking like 22,000, 20,000 mark, or somewhere in that neighborhood as a possible floor?
Well, you always have to prepare for the worst case. And so that's why I bring up, the 22K, the 19K price targets, because it's like, guys, what's your plan if Bitcoin goes to 19K? Are you just going to hold it? Are you just going to hold? Yeah, I would at that point, but you just have to, it's important to have a plan so that you're not caught like a deer in headlights when we see extreme price action. We did have a large significant leg down today, and we do have reasonable support at 30K and 29K based on sequential setup trend lines and various timeframes. So I wouldn't be surprised if we kind of just treaded here at 30K for a week or two before the final leg down into this golden accumulation channel. And this kind of goes back to the point that Monty brought up earlier about, why can't we just go right back up? We've already gone down like 25, 30% since the peak. To me, it is more important, or rather just as important, to consolidate for a 3 to 4 week time frame. That's just as significant as the percentage drop that we actually experience in price. So I would not be surprised if we consolidate here for the next week or so before declining one last leg down into these lower levels. Because if we look historically, that would not be uncharacteristic. If I go back to 2017 here, you can see that bang, bang, consolidation at prior support, and then one final leg down. So we'll see if something similar happens, but got to be patient. Trading and investing optimally requires a lot of patience.
And one thing I will note from just my day job as head of institutional services at BQuant, so we're a big player on the institutional side, large prime broker, but the inquiries for buy orders on the OTC side for Bitcoin this week alone, I will note, has been over $250 million. From institutions. So to me, that shows still a great appetite in Bitcoin. And I might actually cover this tomorrow in tomorrow's episode. I have a few redacted things, but not only have we gotten about $250 million in OTC buying interest, we also have had numerous inquiries from small and medium-sized businesses looking to transition some of their fiat balance sheet money into Bitcoin. This has happened all just this week, this noise, while the market has been on a downward rotation. So I still find it interesting that, some people are seeing opportunity in this. So Monty, anything to add to the Bitcoin day?
Yeah, just quickly. I mean, we talked a lot about how the bull run this year felt different. And I think already just at the start of this bear market, it feels different too. And I think that has a lot to do with the presence of institutions and sort of these OTC traders you just mentioned. I was taking a look at Trade the Chain's dashboard, and although the daily sentiment is negative, the long-term sentiment is still good. And that does kind of seem to be the kind of general consensus amongst traders right now, is like, oh, we're in a bearish downturn, but it doesn't feel like time to panic, because to me, it just seems like anything below 30K is going to be a great price for Bitcoin. But like CJ said, you do really have to kind of prepare for the worst. And yeah, I think it's going to be a slow run down, nothing to really panic about in my opinion.
And yeah, last thing I'll say is, like, I don't think this is the start of a bear market. I think we're macro bullish.
We could talk about this all day long.
It needs to be healthy. We got to put in a healthy higher low. Got to put in a healthy higher low.
If we, CJ, with that, if we do slip down into bearish territory and start to go for that long U shape up again, what would that expectation? You talk about preparing for the worst. What would that expectation be as far as how long we would remain in bearish territory while we do consolidate and recover?
Yeah, so I don't expect us to go below that bottom Bollinger Band on the weekly, and that's about, 22 to 24K. If we go below those levels, I don't think we will, quite frankly, based on the macro bullishness of the space, the demand coming in from OTC institutional investors that you mentioned. I think we're going to be macro bullish, but the one thing that would keep me I guess from hodling is just something that would be fundamentally wrong or broken in the Bitcoin infrastructure. As long as we have a fixed supply, there could be, we're still macro bullish, but in the interim, you never know about black swan events. You never know about the overall fundamental economy. We had a massive black swan event in last March while the market was in a somewhat neutral environment, and we fell drastically. So, we do have to prepare for the worst. Those things are highly, highly unlikely to happen. But I don't see a world where we go below that middle band on the weekly at about 22 to 24K.
Okay. All right. Well, before we wrap that, have you seen any honey holes lately?
We're entering that territory. We're almost there.
We're getting closer. We are getting closer. There were some participants in our chat who were excited about that earlier, but I won't get into great details. If you haven't already, guys, please hit the like button as well and subscribe. We really appreciate that. It helps us spread this YouTube content to as many folks as possible. But that being said, Alex, any final thoughts?
Well, we have to announce this week's $50 Bitcoin giveaway winner for Ryan's hairdo money. So
that's why he's not here. He couldn't stand to see us give away his precious haircut money.
I totally think so, man. Okay. So I'm going to try my best to pronounce this correctly. It is Shofar, 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 Hagedol, Hagadol, Hagedol. Shofar Hagedol is the winner of the $50 Bitcoin giveaway this week, and Twitter handle at Incognito1, Incognito1, and that's spelled the correct way. So it's a pun on words. It's actually really rather clever. So to claim your free $50 Bitcoin this week, please DM me on Twitter at Alex Mascioli so that I know it's really you coming from that account. Shofar, Hagedol, Twitter is Incognito1. Congratulations on that. Hang on to your handlebars, avoid those honey holes, and we will see you again tomorrow.
Thanks, everyone.